Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today, and with me is Lisa Simpson. Lisa, great to be with you.
Thank you, Eric. It's great to be here.
Well, we've got a action-packed program. Let me just go back one slide here. So we've got a lot to cover, Lisa, and we're going to, in a minute, talk about how we are hitting our 5-year anniversary. But let's first just clear the agenda. We're going to kick things off with Mark Peterson and do a DC update. A lot happening, obviously, in Washington, D.C. And then we're going to have a very interesting discussion with Gene Marks, who many of you know, a leading CPA and business leader, and he's going to help us unpack what's happening related to the tariffs, and we're going to talk about the small business environment with Gene. Then Lisa, you're going to be covering an update with Tom Grosskopf related to the federal program funding freeze impacts on accounting and reporting, and then Melanie Lauritzen is going to provide the technical update. But Lisa, let's first kick off today's town hall just talking a little bit about our journey. It's been an incredible journey. I mean, today we've got a lot of breaking news that we're going to be covering. That's what we've been doing for the past 5 years, really trying to bring the best insights to the town hall group. We've got over 30,000 regular attendees. This is the 141st episode. And if you count all participants, and these are not unique, we've had over 1.35 million or 1.35 million participants.
It's just a testimony to the North Star that we've set for Town Hall, which is always to be bringing the latest, most relevant and timely news that we have. And I think you can see that with the that this show's agenda. We're going to cover a lot, and we're going to cover a variety of topics. And I love that we have this forum and so many engaged professionals that share the conversations with us.
Yeah, well said, Lisa. And you and I, we welcome all of the comments and input we get from this town hall community. It really makes us better at what we do. So just a couple of other updates. Last week, Lisa, you were with me, and we held the AICPA and CPA.com AI Symposium here in New York. It was very well attended. It was attended by firms of all sizes, a number of technology solution leaders. We had updates from regulators. And it's a very important time to discuss to discuss AI, in particular Gen AI, and what it means to the transformation of the finance and accounting area. Mark Koziel and I recorded a 10-minute summary. So here's a link to that. I encourage you to listen in. And Lisa, these are some of the major takeaways that our primary research is uncovering related to what's happening inside the practice. So Mark and I talk about these. I think we're well aware of just kind of the automation's impact to the accounting services area. A lot happening with tax preparation. Audit is also taking advantage of these AI capabilities. So Lisa, I know this is something you're talking to the firms a lot about.
Absolutely. It was an amazing day, full of just mind-blowing insights into how quickly this the Gen AI technology is being deployed in firms through their vendors, or sometimes with the firm's own development. And it's incredible to see how the work that we're going to be doing will change over the next 2, 6, 8 months. By the end of the year, some of these developments are going to be pushing forward how tax returns are done and automating them almost to the final step, with the important caveat of keeping the human in the loop. It's going to change the way that new graduates coming into firms are going to need to be trained and upskilled, and the skills that they're going to need to bring to the conversation. So a lot to be excited about. I was with a group of firm consultants yesterday, and we just came away thinking there is not a better time to be in this profession, because technology and the quick advancements are going to change what we're doing just in such cool ways. It's going to be fun.
It is, Lisa. And one thing that we took away from the symposium was when you look at the public accounting market and you look at these solution providers in the tax space, in the accounting space, in the audit space, they are actually helping the public accounting group be ahead of other industry categories. And there's a number of reasons why. And one of the key reasons is that the data sets around accounting services, around the tax area, and around the audit are really perfect for Gen AI. So that's good to see that the public accounting practice is a little bit ahead. When you look at the finance function inside corporations, we had Gardner with us, and they felt that that was slightly behind. And what is getting adopted quicker in the corporations related to Gen AI is the marketing department. The marketing department is taking the lead. So we're going to be having a Gen AI session in an upcoming town hall, and we've got a lot going on related to this multi-part initiative. So Lisa, another big item that came out earlier this week or it was actually at the end of last week, is the announcement related to SARS 27. A new SARS has been issued, and this SARS is related to SARS 21, and this is going to make a huge impact to the client advisory services area. We're stating it's a new era, and what's going to happen is most firms are going to move their CAS area out of assurance now and into the advisory and consulting services, and it's going to fall under the consulting standard CS 100.
You know, a lot of practitioners may not walk around quoting SARS numbers, but I remember SARS 21 very distinctly because it introduced the idea of prep engagements, and then this is an advancement of that prep engagement standard by actually providing the clarity that practitioners were looking for over the past few years as they developed the advancement of their CAS services. So it's been really well welcomed out in the community, and we're very thankful to the committee for bringing this forward.
Yeah, a lot of social activity related to this. We have a CAS Advisory Council, which, Lisa, you're a part of. This CAS Advisory Council provided a lot of input to the ARCS Committee, which issued the standard. So it was a great teaming between the Advisory Council and the ARCS Committee. Here are some of the comments from a number of practice leads. At the bottom here, you've got a quote from the leader of the consulting services and advisory area, Baker Tilly, stating that they are going to be moving the CAS area under their consulting group. So it is happening, and you can early adopt. And Lisa, you and I will be having a session on this in a future town hall with some of the ARCS committee, as well as some of these practitioners that are leading these areas.
We're looking forward to it.
So Lisa, thanks for being part of this important opening. And now we're going to pivot and move to the DC update. So welcome, Mark Peterson. Mark, it is a busy week. So we're gonna. I know everyone is talking about the tariffs, and we're gonna get into that shortly. But you've got a number of other updates before we unpack what we are seeing related to the tariff announcement.
Yeah, well, we actually had a couple tax wins on the House of Representatives. There were several initiatives that we have championed for several years now related to providing more relief around natural disasters and also reconciling the date stamping between whether it's electronic communication or written communication to the IRS. What that does, they passed the House of Representatives unanimous vote, which again has been years of work that went into that, but it tees it up for reconciliation. And that is another thing that we're going to talk about, Eric, is we've talked about this big tax bill, but it has to go through this reconciliation process, all of that, because that's what is leveraged in order to have a simple majority vote in the Senate versus 60 votes required. And that's in play. And so we're going to have a little discussion about that as well.
So Mark, here's our summary slide. A lot going on. So let's just dig right into it and talk about the budget reconciliation bill.
Yeah, just to recap. So the House and Senate passed two different versions originally. House looking at one large bill that included tax plus other initiatives around immigration and defense and energy. And the Senate their view was, let's do two bills. We're going to do a tax bill second. So they've been trying to figure out how they were going to manage those differences. The Senate is moving forward with a package that is basically their response to the House, which does include tax along with those other priorities around defense and immigration and energy. Does make some tweaks. It will increase the debt ceiling within the language. Debt ceiling has been hit. Treasury is using extraordinary measures, they're called, to extend having to deal with that into the summer, maybe fall. It's somewhat of a moving target. They would include that. The number that they take the ceiling to is higher than the original House proposal. Also, the spending cuts that were included in their budget are not as big. So there is some grumbling going on in the House side from the budget hawks about raising the debt limit beyond what they had agreed to, and then also the spending cuts not being the same. Having said that, if they can get this done, it looks like it's going to be a weekend vote for the Senate. The clock is ticking. They have to run out the clock related to debate from a procedural aspect. But the Senate could be voting this weekend, and if they get it done, the House is in next week. There's a possibility that the budget could be done before they all break for the Easter recess. If that's the case, that means it's go time on the tax debate. And so this is the first step in order to get to that conversation. So we're going to be watching it this weekend and then see how the House responds next week. But I think there's a lot of pressure to get a deal so that they can move on to the conversation around those expiring tax provisions, Eric.
Do you think, Mark, all the big tariff announcement yesterday is going to cause a distraction in advancing these bills?
I think that yes, there is a lot of buzz around the tariffs, and members of Congress are dealing with home state calls that are coming in. Some of them with concern. To be honest, there's some political popularity related to reinvesting in manufacturing and the tariffs, so it's a little both-sided. But everything has an impact, to be honest, on how they're going to move forward. There will be the tariffs potentially could raise some funds. They would not be included in this, but that could help over the longer term, the kind of discussion from those deficit hawks that I mentioned before.
Well, Mark, another very important confirmation is now progressing.
It absolutely is. So we got the Secretary of Treasury confirmed, Bessent. Next, we were waiting for Paul Atkins to take over at the SEC. He had his hearing, lots of very good discussion at the hearing, a lot of focus really on crypto. Some discussion around the PCAOB and public company accounting. ESG came up quite a bit, concerns around from the Republican sides around inserting politics into investment. And so basically his line when he was asked questions related to the PCAOB and this idea of maybe restructuring it into the SEC was policymakers are going to decide and he will implement whatever they decide. He was voted out of the committee, which means the next step is the Senate floor, and we think that is just literally a scheduling issue. So potentially next week or after they get back after recess, I anticipate this will get done. Once Atkins is in place at the SEC, we'll know more about his agenda and how things will play out with the PCAOB related to public company auditing specifically, Eric.
Well, you've got a PCAOB announcement.
Yeah, I do. Some good news.
There you go. You got this right.
Yes.
Go ahead.
Yes. So, well, we've talked about there has been some challenge of audit quality from the chair of the PCAOB, Erica Williams, over her tenure over the last, close to 4 years, 3 years at least, related to the focus on audit quality by the firms. But actually, she just put out a report March 31st talking about the significant improvements across the largest firms as a result of the inspections. So it's very good news, and it reflects on a lot of hard work that has gone on, and again reiterates what we believe has always been our focus on quality.
That's excellent. It's just great to see, and well deserved.
It is a lot of hard work.
Well, Mark, let's get into the topic of the day and bring in Gene Marks to help discuss it. So you all know, you all know Gene. Gene's been on a number of town halls. I think, Gene, you probably were with us in 2000 when we started these town halls. Yeah. Best-selling author, very, very connected to the small business community. Earlier today, Gene and I were talking about many of the different trade groups that he's been with over the past month. So he's bringing a lot of current data to us. He also, runs a firm and was a part of KPMG earlier in his career. So welcome, Gene.
Thank you.
So to set this up, we're going to have Mark talk a little bit about the U.S. trade imbalance.
Yeah, no, I mean, this is not new. You can see from the graph, it's gotten bigger over the years, and it's been a focus of debate in Washington, and to be honest, some policy agreement related to try and address the imbalance in the trade deficit, and then also, creating manufacturing jobs back on our shores. I think that, so again, what you'll hear a lot, even for those that are criticizing the executive orders yesterday, is they almost always start with, well, we do need to focus on figuring out how to become competitive again as it relates to good manufacturing jobs, and then the but comes from, the aggressiveness of these executive orders. So that's where the disagreement is. And this has been, again, something that has been focused on by policymakers for years. A couple things, when you look at just some specific numbers, when you look at the imbalance, China, the imbalance is $295 billion, EU $235 billion, Mexico 171, Vietnam, and if you have Vietnam and Korea close to 200, Canada 64 billion. So those are significant numbers, and those are really, when you look at those countries, we've had a lot of discussion specifically about Canada and China and Mexico. What was announced yesterday was a 10% across the board for all imports, and then at least 50 plus countries that would actually be getting hit with steeper tariffs. Again, a lot of disagreement over the means of trying to address these issues. The president's talking about trying to supercharge the domestic base. And the response is we're hearing from countries coming in, we're hearing the political discussions that are going on. They're going to either retaliate or negotiate. And so that's kind of the gamble that is going on, and what will the impact be? I think a couple things politically. A significant issue in the election was fatigue related to inflation and consumer prices. And to the extent this exacerbates it, that will be a problem for the president. Although there will be some patience, I think there will be some amount of time to allow this to work, at least for some of the American public. But obviously a lot of noise in the system politically, and a lot of noise in the system in the media. Two other artifacts, and I'll turn it back to you guys to think about, is there is some political challenge coming even from the president's own party. There was a vote actually yesterday as the announcements were going on to roll back the Canadian tariffs. So they had used emergency authority in order to, based on curbing fentanyl coming across the border, in order to impose tariffs on steel and aluminum. And that executive order power can be overturned with a simple vote. It doesn't need 60 in the Senate because of those emergency powers that were utilized on this one. 4 Republicans crossed the aisle. And so it actually passed the Senate. Now it's going to go to the House and it won't go anywhere, but it does show some Republicans willing to vote in the other direction because of concerns. And there's legislation that's been introduced in the Senate as well, bipartisan. Chairman of Judiciary Grassley, Iowa, big ag state that will be impacted by tariffs that already are related to trade with Canada, to actually limit some of the president's power, some of any president's powers as it relates to tariffs, requiring a 48-hour notice if they move forward and announce tariffs, and then having to get congressional authority for them, a vote after 60 days, and then allowing Congress actually to repeal at any point in time. Just to remind everybody, the tariffs that were announced yesterday were done through executive powers. So they will last as long as this administration is in play, unless again Congress comes back to overrule. But that would take a supermajority, and it would take a lot of Republicans to vote against these, and I just don't see that.
Well, Mark, thank you. Great setup. So right now, I mean, these are being driven by executive order.
Yes.
As you said, they could be overturned in the future by another executive order, or in the short term by a supermajority. That'd be a vote of, you need 60 in the Senate to kind of move this legislation through. So that's something that clearly will be in the press and will be talked about in the coming days.
Can I also just say,
hop in.
Mark, that was a great setup. I mean, just fair and balanced. You really, I'm just really impressed. I mean, it tells us exactly where we are, and I appreciate you just giving us the facts. So thank you.
Well, you should be on every week. Thanks, Gene.
Well, hey, well, stay with us here, Mark, and here's a summary of some discussions that we've been having with firm leaders. I mean, this is a hot topic. The market is, we're all looking at that, tremendous market volatility, a lot of anxiety. So there's a lot of anxiety in the system, and some really good firm leaders, a number of CEOs that we were talking to today. This is some of the input that they provided. And I want, Gene, you to comment on it. But one thing they said was, anyone who says they know what is going on is not telling you the truth. I mean, we're in an uncertain time again. And we're also in this action-reaction period. Huge action yesterday, and now we have to be determined how long this reaction period will be. What will the other countries do? What will the administration do? What will Congress do? So then what's the role here from an advisor standpoint? And Gene, you're going to give a number of great, more detailed insights on what you can be doing with your clients. But at the highest level, it's time for open and honest communication between your clients and their suppliers and their customers. We all got to be careful. It's even back during the pandemic days on be careful on overreaction, because this is it's something that we need to see how it sorts itself out. Try to keep emotion out of it. Even here, we've got a lot of input coming to us right now, Mark, from the town hall community. People are frustrated. People are upset. Sure. And with all that said, we're providing professional services to your clients. So it's good for us to try to. That's what we try to do in the town halls. Try to keep some of the emotion out of it, and give you guidance on how best to manage it. And then finally here, Gene, and this is going to kind of set up your next segment here, is focus on what we can control. And I know you've got a lot of insights, but just before you get into that next layer of what you can control, how do you look at this kind of CEO firm leader discussion?
First of all, I just have to say that as CPAs, as challenging as this environment is and disruptive as it is, uncertainty brings opportunities. And our clients are looking at us for help. And I think there's a lot of help that we can provide. And I think we should be looking at it as a positive way that we can provide services to our clients and help them navigate through this. The other thing, Eric, that and we were talking about this before we started recording, but I speak to 50 or 60 industry associations every year. Just recently, you have to keep in mind as a professional service provider that different people have different points of view on these tariffs. I mean, there are a lot of people where it's negatively impacting their businesses, but I spoke to the Kitchen Cabinet Manufacturers Association like 2 months ago, and they were all about tariffs because a lot of the key materials that they sell are being dumped here by China at prices that undercut them, and their whole association is lobbying hard. They've been lobbying hard for higher tariffs. And I spoke to the Steel Marketing Institute as well a month or so ago, and as we know, people in the steel industry are also very pro-tariffs. There are people that are unions are very pro-tariffs because they feel it can bring jobs back. And then again, we just mentioned earlier, I spoke to a bunch of Amazon merchants, many of them selling products that they're buying over in Europe and China, and they're not happy about these tariffs. So I just think as advisors, we have to take into consideration that where our clients are coming from and how this is impacting them, and just know that some are actually very supportive of tariffs, and some are, it's impacting them very negatively.
And some of the input that's coming in right now are on the negative side. They're saying, here it is, they've got clients that are going to be significantly impacted next week,
as do I,
as these tariffs hit. So and I think we can, so it is, so that's frustrating, and people saying, hey, I am frustrated, I am upset, and that's understandable, because it's something that the administration's been talking about. People have been talking about tariffs for a while, but the speed of this is still shocking.
It is, and you're right that the administration and the president has been talking about this even during his campaign.
Right.
A lot of the advice that I'm about to give and some of the strategies I'm seeing my clients doing, some of them they started back in November after the election. They were preparing for this. So, but we do have clients that maybe did not think that far ahead, and they're panicking right now. But again, we have to be the advisors to them, Eric. We have to be showing them and helping them navigate their way around this. And I do realize that there are some companies that will be very negatively impacted. I get that. But I think we have the opportunity to provide some services.
So, Gene, cover this, and then we're also not stating. There's, are tariffs a good economic policy or bad economic policy?
Let's not get into that debate.
We should bring an economist on, and there's definitely a lot of issues.
And it won't be one economist,
strategy.
because you can bring 5 economists to say one, another 5 is. It's a debate. But
so let's just go over what this is what. The high level information.
Knowing that 30 seconds into this, this might all change. But yeah, so overall, what happened is we have a 10% tariff now on all imports into the U.S. They are really focusing, though, the larger tariffs on the people that the president said he was going to focus on. China, 34% on existing tariffs, about 54% on most products coming in from China. European Union facing 20% tariffs, not including, by the way, the UK. Japan, 24%, and Canada and Mexico, which went into effect earlier in March on non-trade goods, as it is in this trade agreement. There are some exceptions to that, but it's a 25% tariff. And then there are overall tariffs, not just on countries, but on goods themselves, on automotive and steel and aluminum, buyers of Venezuelan oil. You guys can read this slide and you can see, and hopefully you'll get a copy of these slides. But this is what it is across the board right now. Again, some countries right now are thinking of retaliatory measures. Canada actually had proposed having no tariffs back to the United States if they came to that agreement. We were going to see where these retaliatory measures go to. But right now, the European Union is still up in the air as to what additional retaliatory tariffs they might take on us as well. Bear in mind, again, without getting into the debate, the entire country of Mexico has got an economy the size of Florida. The entire country of Canada has got the economy of the size of Texas. California is the 4th largest economy in the world. So, the president's going into this saying, we wanted to be treated more fairly. And I think that is, when we talk about how long these measures are going to last, I think it will be more negotiation than retaliation as the months go on. That's what I'm predicting. But that doesn't take away the challenges that we have.
There's a lot of emotion, Mark. There's a lot of emotion in D.C. Even on TV right now, you can see it.
Yeah.
This is very, very kind of just in some ways it's personal with a lot of people.
No, it's right. And to actually the first point, if somebody tells you don't believe them. I think that one of the challenges, because business doesn't like uncertainty, is the administration is saying that we're in for the long haul. They need to do that, right? So if they're going to negotiate hardball, right, they need to say that they're willing to stick it out. And then you have speculation. Well, if a negotiation versus retaliation starts to kick in, how long will this last? Will it become sector specific or country specific? So there's on top of the uncertainty about the economic impact, there's also just uncertainty individually how politicians are going to be responding in different countries, because they're going through the same analysis that the U.S. is about the political impact. And how do they deal with this situation? And AICPA does not have a position on tariffs. This is an observation so that we can kind of help the membership figure out how to move forward through this, as this plays out.
Well, but we do have thoughts on strategies on how to best manage this. So, Gene?
Yeah, let me just share with all of you guys watching this as to what I've been writing about for the past few months in different places, as well as what my clients are doing. The kind of advice that you can be given to your clients. Yes, communication is important, and discussing with your suppliers and all of that. But real world stuff. If your clients are not aware of it, or if you're not aware of free trade zones or bonded warehouses, there are a number of them all around the country. A free trade zone and a bonded warehouse, which is most oftentimes in a free trade zone, will allow your clients to buy materials, buy inventory from overseas, store them in that free trade zone or that bonded warehouse, and pay no tariffs on those goods until those inventory items are pulled out of inventory and ultimately sold to the customer. So I have a number of clients that are using bonded warehouses or warehouses in free trade zones to bring products in and store it there. And their bet is that these tariffs are going to be negotiated and hopefully negotiated down or even away. So why pay the tariffs now up front if you can bring the stuff in and just at least keep it here and then pull it out once things are more clarified as to where tariffs are going. So it's a good way to defer tariffs until they actually come down. One other thing on a bonded warehouse or a free trade zone is that if you have clients that are bringing in materials and then turning around and reselling them overseas, you can avoid tariffs altogether if you bring them into a bonded warehouse or into a free trade zone. So a little bit cost, obviously you have to rent out the space, I get that, but that might be a good strategy for one of your clients. That's number one. Number two, I have a lot of clients that are leaning on certain international trade organizations. I wanted to give a shout out to the World Trade Centers Association. It's WTCA.org. They are membership driven, but they do provide free services to businesses. They will help your clients identify suppliers in parts of the world or certain countries that are more tariff friendly than others. So if you have a client and they are buying a lot of goods from China, and we all know that tariffs are very high coming from China, the World Trade Center Association will work with their client, no charge, although they would like you to become a member. They will find your client alternate suppliers at other places around the world. They will make introductions for you. They will even go with you face to face if you want to take trade visits or go on trips to visit those countries. I've written about these guys a few times, and I have a number of clients that have used them well and say that they've provided just an enormous benefit for navigating their way around these. Obviously, you want to evaluate your exposure and your contracts. And again, I think that's a role that we as CPAs can play with our clients to help them identify different areas where they can be saving. Obviously, where you can build inventories now or before tariffs take effect, or again, leaning on those free trade zones, the more now, the better, because your customers, their clients' customers are worried about increasing prices in the future. So that takes some working capital to do, but I have a lot of clients over the past few months that have been building inventories in advance of this happening. Go ahead.
Question,
Jump
Gene.
in.
Just some great points here. On the evaluate exposure and contracts, when you look at that, some of these are relationships that some of the firm clients have with their customers that are very long term. So you could have a contract that could be it could be put you at an advantage or disadvantage, but it's also probably just to openly communicate, just like where you stand, what impact this has on you, what impact it has potentially on your customer, and try to maybe almost work together on it.
That is correct. And sometimes our clients, particularly if we're dealing directly with owners of businesses, they deal more out of emotion than out of ration. And what they should be doing is looking at their contracts that they have with our help, evaluating what their risks are and also evaluating what their options are, and seeing where there's a chance to go in and renegotiate some of these contracts. I have some friends in the CPA community that do the negotiations on behalf of their clients, so they can avoid any types of emotional or personal problems. But now's the time that you want to go ahead and do that. And by the way, I am finding when it comes time to pull out those purchase orders and contracts that a lot of suppliers are expecting those conversations because they have the internet too and they read the news.
So Gene, just from a time standpoint, just maybe hit a couple of more of these strategies. Combine these last two. And even like we were talking about 5 years ago when we kicked off the town halls during the pandemic, there was a lot of strategies on how to navigate the pandemic. It was a very emotional time.
It was.
There was lots of disagreements on how to go about it.
Absolutely.
And yeah, Mark, and you just tried to leverage the best available information, leverage some of this, and frustration with some things that were happening at the leadership level in DC. So I mean, I think we've learned from that, and this is a very trying time.
It is, and bottom line is this: tariffs are hitting our clients their cost of sales, so it's hitting their margins. That's where it's hitting them the most. We as CPAs understand financial statements, I think even more so than many of our clients do.
Right.
And now is an opportunity to dig deeper into the jobs that we have running, to the cash flow that they have, to their overhead that they're incurring as well. Now is the time to go in there and do a full review and say, hey, listen, if you let us come in here and review your financial statements, I get that your margins are now being hit by a couple of points because of these tariffs. That's a fact. Where can we help you reduce some overhead, recommend some better processes, even some technologies like AI that could cut down on your operational expenses, and therefore, in the end, it's all about the bottom line. And that's what we do to help our clients navigate through this time, which I hope is not going to be a long-term thing, but we have to prepare for the worst. And that's the role that we play.
Well, Gene, that was a great summary. Let's just bring Lisa up here, and we'll segue into the next segment. I know, Lisa, you've been listening to this, but just even that, I mean, what Gene just said here, there is a lot of pressure from a financial standpoint, but it is to go sit with your client, review the financial statement, review the state of the business, and maybe there are some other opportunities to offset some of these, surprise tariff costs.
Absolutely. And I love the tips that Gene has given us. We've got so much financial planning and analysis skill within the profession. So now's the time to pull that out and really start helping your clients with cash flows and forecasting. So, Gene, I wasn't familiar with the free trade zones and bonded warehouses. So that's my key takeaway from this. It's very helpful.
Yeah, I learned a lot too when I wrote those pieces. I was not as familiar with them either. And you know who turned me onto it, Lisa? Was somebody at the World Trade Center Association. Said, you want to look into this? Just to give you an example of the kind of advice that they give.
Well, thanks, Gene. I think we're going to have you back on to continue this discussion on navigating what's going on here in the tariff environment. And Lisa, I'll let you introduce Tom and move on to this next segment. Thank you.
Thank you. So we're going to zig a little bit. We're going to stick with federal discussion, but this one is about the impact on accounting and reporting implications for organizations who might be facing impacts from federal program fundings. If you can say federal program funding freeze 3 times fast, let me know, because I certainly cannot. But with that, I did want to just clarify exactly what we're going to talk about with Tom Grosskopf. And many of you have seen Tom. He's been active in the profession and is a regular on speaking about technical A&A topics. So Tom, welcome back. It's good to have you. And one of your many hats is as the technical director for the Center for Plain English Accounting. We've given a little bit of your bio on the next slide. But again, I'm sure a lot of folks are familiar with you. So thanks for joining. And I'm excited to talk about this topic because I think it's going to be really relevant for a lot of our attendees.
Yeah, it's my pleasure to be here, Lisa. And it does directly kind of relate to what was just discussed. This being a little more specific to many not-for-profits who happen to be much smaller than some of these other organizations and less financially sophisticated.
And so let's dive in, because I know we want to get into some of the details. So again, here's your bio for those of you who don't know Tom. And let's talk about specifics. So because you've put together a great list of the types of funding actions that organizations might be facing. And it's not just not-for-profits, it's other entities. But we could be looking at grants being frozen, loans being frozen, terminations, inability to withdraw funds, adjustments. And then on top of that, you've got the uncertainty around legal challenges and court orders. So we've got to talk about uncertainty. We've got to talk about contingency planning, which is really important. But today, let's dig into some of the financial reporting issues. So can you just give us some examples of the types of financial reporting issues that you all are coming across in the Center for Plain English Accounting?
Yeah, sure. Happy to. And, we at CPA, we are primarily focused on private companies and not-for-profits, providing our top technical resources on those entities. And really what we're seeing now is uncertainty about the revenue stream for recipients of these grants and contracts, and potentially some disclosure impacts. And a lot of these recipients, whether they're not-for-profits or other businesses, are looking at scenario planning, cash flow forecasting, really reading these contracts and grant agreements closely, which some not-for-profits might not have always historically done, to see how they are congruent or incongruent with the blizzard of activities that are on that previous slide that started with the OMB funding freeze in late January.
So let's dig into the revenue recognition a little bit, because I think that's going to be top of mind for a lot of accountants, either in the organization or preparing financial statements for these organizations. So what are some of the details that you're thinking about around revenue?
Yeah, absolutely. So with a not-for-profit, a grant recipient, they're either going to account for this through the contribution model, almost always the conditional contribution model, or the exchange model, topic 606. Sticking with the contribution model for a moment, a lot of these actions have given rise to questions about whether or not there are new barriers that have been created by new federal actions on whether or not something that might have been a qualifying expense, reimbursable expense, if you want to think about it that way, will continue to be. And this goes back to scrubbing these contracts and staying on top of these situations, a wonderful opportunity for the profession. I will say this, in some cases, this is just a delay in payment. In other cases, there's a lot of uncertainty. There was a bit of fortune, though, that the timing has hit at a point where many not-for-profits that are calendar year ends, this is a subsequent event that's not recognized because the Trump administration wasn't even in force on 12/31. And then for the other swath of not-for-profits that are summer year ends, they've got a little bit of time to see how the dust settles on all of this, to see how this may affect their streams coming from grants. If they are exchange transactions in the scope of 606, there's very prescriptive guidance dealing with variable consideration and contract modifications and contract terminations that could be applicable as well. If I make one final point on this, most of the contracts with the federal government, whether they're characterized as grants or not, have what's known as a termination for convenience clause, where the counterparty, in this case the federal government, can terminate for any reason or no reason, but they do have to compensate the recipient for work performed up to that date. So I think navigating through all this nuance and scenarios is a great opportunity, especially for these less sophisticated not-for-profits and other private companies.
It's a great point. And you mentioned subsequent events, so that'll take us down into disclosures, because I know disclosures are something that you're required to, or you need to be thinking about. So dig into disclosures for me.
Yeah, happy to. So as I mentioned, for the calendar year end not-for-profits, we think this is a non-recognized type 2 subsequent event. Again, the Trump administration wasn't even sworn in on 12/31. Now, there may be requirements to disclose as a non-recognized subsequent event the financial statement impacts, if you know them. For a summer year end, obviously would not be a subsequent event, would be a recognized event. And other disclosures may kick in as well related to concentrations, risks and uncertainties, liquidity and availability of resources, depending on how general expenditures is defined. And unfortunately for some, going concern. And, going concern would be the one where you got to caveat this a little bit, that you can't tie that anymore if you're using GAAP to a balance sheet date or date of financial position, statement of financial position, because it is a 1 year from the issuance date look forward from when the statements are issued. So in that circumstance, the balance sheet date or date of financial statement position may not be quite as relevant. So there's really a lot to think through. I know on the next slide, we've got a link to a lengthy paper that my colleague in CPEA, Andrew Merriman, and I co-authored in last month on these topics. And we are continuing in CPEA, as is our mantra, to stay on top of these and provide the latest guidance and thinking as reporting dates near for those summer year-end not-for-profits, and as well as for the calendar year-end not-for-profits, what this means for them in more detail.
And Tom, thank you for that. CPEA put together an executive summary of their, I can't remember if it's 11 or 14 page deep dive into the topic, and we've hit on just a little bit. So in your resources today, make sure that you download that executive summary. One of the things I love about CPEA is its title, and it's true. They try to make everything as clear as possible. Another benefit that I really have is they give you examples and kind of walk you through some of the scenarios that Tom's talked about today. So, Tom, I know we had a very short conversation about a very important topic, but it's also a good chance to talk about the AICPA's ANA Focus webcast, because I think we had a conversation on there yesterday about this as well. So
we did, and we had a ton of interest in the topic, so I'll be very curious to see if this topic is of interest to this audience as well. And look forward to any questions on these issues as they evolve and emerge.
Thank you. And it is a great reminder that you're going to be following this for us. So we will keep everyone updated on developments around this topic. Really quickly, another reason that I love the Center for Plain English Accounting, you'll see on the next slide, is that it gives you written technical answers to written technical questions. It's also built for small firms to provide a national ANA resource support system. The dues route, the cost to join is tiered by firm size. So I would encourage you to check out CPEA. It's one of the best gems hidden within the AICPA for small firms. So Tom, thank you for that. We're going to zig over into technical updates, but hang in there and we'll get you back at open forum.
Great. Thank you. Appreciate it, Lisa.
And with that, I'm going to bring in Melanie really quickly. She's going to take over technical updates, and I'll come back at the end and hit ERC.
Sure. So let's go ahead and dive in with BOI. So late on March 21st, FinCEN issued that interim final rule, which did become effective on March 26th. So any U.S. company or citizen, they no longer have to file a BOI report. Now, if you recall, originally the reporting requirement captured about 32.6 million entities, and now it's estimated that under 12,000 foreign entities will need to file the BOI reports. So thanks to over a decade of work and effort, and also thanks to the CPA state societies, I'm going to take this one as a big win for us. Now, foreign entities, they still have a filing requirement depending on when they register to do business, with the earliest filing date for them being April 25th. In the meantime, I've also reached out to FinCEN asking what they're going to do with the data that they already received. And I haven't heard back from them, but once we get that information, we'll go ahead and share that update with you. So shifting gears into the next slide, we're going to go into IRS. And on the last town hall, we did a poll asking how the IRS tax season service levels were compared to last year. And 73% of you responded that it is about the same. Now, this is a snapshot and a moment in time. So we're talking right now. And this actually reinforces that taxpayer services are the priority for the administration and the IRS. And we also know that the IRS is really trying to do everything within their power to maintain service levels consistent with those of recent years. Now, immediately after the filing season, we also do our annual IRS services survey, and that dives into a little bit more detail. So please be on the lookout for that, because that tracks over a decade of changes with the IRS. So with the next slide, we are still actively monitoring IRS operations. They are constantly changing, and most recently, we've also seen longtime IRS employees leave, such as Heather Malloy and also Bill Paul, who was acting chief counsel. But most recently, we also heard that the IRS is placing over 50 IT executives on administration leave in preparation for reduction in force. which is also known as a RIF. Now, you may also recall that in January, the IRS had fired over 7,000 probationary employees. And on March 19th, the IRS actually sent those employees an email saying that they actually weren't fired, that they would get retroactive pay, but they were on administrative leave, and that those employees could still be fired within 60 days or more if the protocols for a RIF were followed. And yesterday, the IRS actually sent these same employees a new email telling them that they had to resume work full-time in the offices by no later than April 14th. So let's jump onto the next slide, which covers the RIF, which is, again, a snippet of what was reported by the Washington Post as to what the RIF was that was submitted to Treasury on March 13th. Now, we have some reliable sources who have told us that this information on the slide is sound. And to be very clear, this is not the final approved RIF, but it is the proposed RIF. And the administration will go back to the IRS with a final RIF. And we've heard that it should be implemented by May 15th, but of course that date could change. So as you can see, the RIF is approximately a 20% cut for the entire IRS workforce, but it is not a 20% cut across the board. So taxpayer services is only getting approximately an 8% reduction, which is again reinforcing that taxpayer services is a priority for the administration. Of note, we have online services, which is how we communicate with IRS, that's getting a 50% reduction. The taxpayer advocate is getting about a third cut of reduction. The chief counsel's office, which issues the regulations, they're getting about a 15% reduction. And then we see things like the transformation strategy office, which is getting 100% of a cut. Now, at the bottom of the slide, I have a link to the Washington Post article, and that actually shows additional information about the RIF, and it actually even breaks it down between those probationary employees and those that took the voluntary deferred program. Now, of note, too, is that our position through all of this is that the IRS needs the ability to help taxpayers and their preparers meet those filing obligations, and those are longstanding positions with modernization and taxpayer services. So let's jump into another issue that is also very important to the profession, partnership basis shifting transactions. Now, IRS was concerned about the abuse of tax rules by partnerships, and in particular, the IRS is targeting the transfers between related parties intended to evade paying taxes. Now, of note, on January 10th, IRS released their final regulations, and within this, they have a 6-year look-back period of partnership bases and those transactions, which is due in roughly 3 months, so in July. Now, when the final regs came out, we immediately came back and told them that the IRS should suspend and remove the final regs. And the IRS actually found that to be interesting. And we're in current discussions with them to do away with that retroactivity. So hopefully that will come soon, but we're still pushing on that front. On this next slide, on March 25th, President Trump issued a new EO in which he essentially is saying that they are phasing out paper checks or paper check disbursements by September 30th, and that does include tax refund checks. Now, there are some exceptions, such as like if you don't have access to a bank account system. But if you want to look at those more details, again, there's a link on this slide that you can go to. On this next slide, we have a digital scam that I definitely want to show to you guys. Are we on the slide? Yep, perfect. Please take a good look at that. It looks very legitimate, and it's not. And if you were to click on that link, it would hack into your account. So please take a look at that. It is a scam. And then Lisa, we're going to pull you back up because we had an exciting update around ERC. And do you want to walk us through that?
I do, and I feel like we all need a round of applause for this slide because this has been a question that's been hanging around for quite some time. So, Melanie, thank you, and I know the BOI was big news as well. So we'll come back to you soon. Very quickly on ERC, we got a total of 5 FAQs updated March 20th, and they focus on topics such as claiming ERC, the income tax return calculation, and some scams out there. Quick reminder, FAQs are not authoritative guidance, but they do provide some answers to questions these especially are related to the statute of limitations that expire April 15 for most filers. And it's a great follow-up to a podcast that I talked about on the last town hall that April Walker had done with Chris Whittick about a lot of the lingering issues on ERC. So to clear them up, let's start with my favorite FAQ answer ever. The first FAQ is, should I have reduced my wage expense on my income tax return when I filed ERC? Yes. I love the short and sweetness of that, but it gets a little more complicated. As we all know, we've gone through the ERC journey the last few years. I want to point out on this slide that we do have some resources for you. So you've got a Journal of Accountancy link that will give you a story about all of these. You've got a link to the IRS FAQs, and they don't call out specifically which ones are new, but you can see the date that they were added. So check those out. And then the podcast that I just talked about, April Walker actually went back in and updated it based on these FAQs. So FAQ number 2 is another good one. And again, such a hot topic over the past couple of years for entities who claimed ERC, didn't reduce their wage expense, and then they actually got the ERC in a subsequent year. So the IRS has made a substantial change in their guidance, and they have said that you can now include the overstated wage expense amount as gross income for the tax year when you received the ERC. So I'm flashing back to my PPP days when we were throwing charts up at you all the time. This is a great table that'll kind of walk you through some different scenarios and whether or not you should be including that income in the year the ERC was received. So that's the second big FAQ. And then the third one that we want to talk about is the ERC claim was disallowed, and they'd already reduced the wage expense on the income tax return, which is one of the worst case scenarios that we had talked about in previous town halls. And so again, the IRS has given us an answer that will lessen some of the burden of this disallowed ERC. You can increase the wage expense on your income tax return. So increasing your expense, getting a deduction for the income that you didn't get by the same amount as when you made the claim. So again, you've got examples of the different filing situations and years that you can refer back to. And again, go back to those resources that we included on the previous link. A quick reminder as we close out our technical update that you still might want to be thinking about the resources in our Tax Season Resource Center. And we've got links for you that you'll be able to find when you download the slides. And they should all take you to the tax season resource center. So with that, Eric, I'll bring it back up to you. And don't know if we have time for a quick open forum or not.
Yeah, let's drop the slides. Bring Mark Peterson back up as well. Let's take a couple of questions. So Lisa, one question, just the effective date on SARS 27. The answer is the effective date will be for periods ending on or after December 15th, 2026. But early implementation is permitted, and I know a lot of firms are going to be early implementing SARS 27, and we'll be talking more about that in a future town hall. So, Mark, we're kind of already in the lightning round here because we do have a couple of slides. But, Mark, I want to ask one thing, just a little bit more details on what Congress can do to step in and if they want to overturn or adjust some of these tariffs that have been put in place.
Well, so again, it's somewhat complicated because it depends on what authority was used. I mentioned the Senate vote related to Canada. That was they utilized some special powers. That's why they didn't need 60 votes. They only needed 51 votes because it was a declared emergency around fentanyl. So they utilized that process in order to get the tariffs. It was executive powers related to emergencies to go after fentanyl. That's how the tariffs were imposed. That's why it was only 51 votes. But an executive order outside of some peculiar other, parliamentary procedure would require a supermajority because the president would have the ability to veto Congress's act to override him, and then it takes a supermajority to override the veto.
So thanks, Mark. And what we'll do here is, we've got our newsletter. Gene, it was great having you with us here today. Melanie and Lisa and Tom, great updates. We will, provide more information to the town hall community as it comes out. We can always hold a special town hall if needed. And Lisa, you and I just we've got a number of resources here. Let's close out with those. So thanks, Gene. Look forward to seeing you sometime soon. So first off here, a lot going on with tax research, a lot of different resources that are available. I know a lot of firms have been leveraging these during tax season. Audit transformation, that's a topic that we're going to be talking about in the coming months. It really is kind of the year of audit transformation. A lot of firms are moving to new platforms. The AICPA is very active in this, as well as CPA.com. So more to come related to those activities, and here are some resources. Lisa?
Thank you. Transformation is a key word this year, and this slide on transformation is around transforming governance strategies in firms. It is a pressing issue for a lot of firms because their decision-making process may be holding back a lot of the other transformations that they need to be making. So it's a great podcast, and we're excited to roll out some resources to support the conversations.
Here's the information about the Town Hall rebroadcast. The next rebroadcast will be this Monday, April 7th at 1 p.m. We've got a number of digital resources available for you. The presentations, a lot of the materials that we discussed today and on past town halls are available at this URL. And finally, Lisa, we have our calendar for the remainder of the year. So here it is. We look forward to being back with you on April 24th. We are trying to get those calendar auto invites out to you for the whole remainder of 2025. Great being with you. 5 years in, Lisa, great doing, I don't know how many you and I have done together. I'm sure it's well above 100. So a lot going on, Lisa. And I'll let you kind of give us some closing remarks here.
Thank you. As you can see from the calendar, we're going to skip the week of April 15th, so you can very easily take the rest of that week off if that's the end of your filing season. And we will look forward to seeing you on April 24th. Thank you.
Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.